Let me show you how to buy, convert, and sell crypto on Coinbase, as well as how to obtain your 1099 DA, a new form, enter it into tax software, and understand how those transactions show up on your 1040 income tax return. Once you log into Coinbase, on the home screen, you can see your total portfolio value, your return amount, and your percentage return across all time periods. You can filter this view by 1 hour, 1 day, 1 week, 1 month, 1 year, and a lifetime. Your portfolio includes crypto, cash, derivatives, and now new predictions, which we won't cover here. You can select the all or lifetime option and scroll along the graph line to see your investments, deposits, and overall performance over time. To check your returns, click the return number below your portfolio value and select a time period. Realized return means you actually sold or exchanged crypto. This reflects completed transactions. Unrealized return shows what your gain or loss would be if you sold your crypto today, even though no actual sale took place. Total return includes both realized and unrealized returns. If you have any crypto on your watch list, you can select it to see its lifetime price history. This information was recorded in the beginning of 2026, so the prices reflect that time. I'm looking at the Bitcoin here. I can see its price and performance over the same time ranges as my portfolio: 1 hour, 1 day, 1 week, 1 month, 1 year, and a lifetime. The price of Bitcoin has been fluctuating and dropping lately, so you can see a lot of red. For example, as of early February 2026, the Bitcoin price was around 70,000. From over 1 year, its price dropped by 25,622. But the lifetime return, going back to 2014 data that Coinbase is tracking here, is almost 70,000. It would have been super helpful to see a 3-year, 5-year, and 10-year returns here, not just the extremes. If you select the 1-year view and move your cursor along the price line, you can see the prices on each day during the year's peaks and valleys. When you compare this to large or even mid-sized stocks, crypto is much more volatile. That means the price moves up and down much more sharply than regular stocks. It's considered more risky. You can click the Insights option to see market analysis for the crypto you selected and read more background information. At the bottom, you can find key stats for the cryptocurrency you selected, such as market cap, trading volume, and all-time high price. If you want definitions for these stats, select See All and hover over each item to get more details. There is also an advanced trading view with more detailed charts and market data. This is meant for more experienced investors who trade short-term rather than long-term. You can see individual trades and the spread between buyers and sellers. Red prices show sells and green prices show buys. If you want to return to the normal view, deselect the Advanced View button or select the 3x3 icon next to your avatar and choose Coinbase. On the left side, under Home, you can select Trade to see all crypto available to buy or sell. Select Browse or Crypto at the top to view the full list. You can then use the filters at the top to sort by trending cryptocurrencies, top gainers, top losers, or highest trading volume. Select the star on the right of each cryptocurrency to mark favorites so they appear on your home screen. To buy crypto, you first need to choose how you want to pay for it. Select the Pay with option. You have 3 choices: One option is USDC, which is a digital US dollar called a stablecoin. It is designed to stay close to $1 and is backed by cash and short-term US government assets. It is often used to buy and sell other crypto without converting back to dollars each time. You may also receive it as a reward from Coinbase. The second option is a linked bank account. If you don't have one set up, select Add a Payment Method and connect a bank account, debit card, or PayPal account. The final option is cash that you already have in your Coinbase account. This could be from money you previously deposited or from selling crypto. If you do not have enough cash, select Deposit Cash. Enter the amount, choose your bank information, and preview the transaction. Once you click Deposit and refresh your screen, the cash usually shows up almost instantaneously. I will buy my crypto with cash. Next, you need to choose which crypto you want to buy. I have Bitcoin listed, but you can select other cryptocurrencies available on the Coinbase marketplace. Enter the amount you want to purchase. For example, $100 worth of Bitcoin, which is a small fraction of a Bitcoin. When I select Review Order, I can see the current Bitcoin price of about $91,000. For $100, I would receive 0.00107413 of a Bitcoin. Note that the total includes a spread plus a $1.84 fee that Coinbase charges for the transaction. If I change the purchase amount to $500, the fee becomes $9.20. I tested different amounts and the Coinbase fee percentage stayed at 1.84%. Once you review your order, click the Buy Now blue button. You will receive email confirmation with your transaction information. Another important item to understand is the spread. Here the market price of Bitcoin is $63,472. But when I try to buy $250 worth of Bitcoin, the price shown under the Bitcoin amount is $64,109. That's because a 1% spread is being applied to this transaction. This means I am receiving less Bitcoin than I would at a true market price. If I divide 250 by 63,472, I would receive 0.0039387 of a Bitcoin. But because Coinbase is using the spread price of $64,109, I receive 0.0038996. The difference is 0.0000391 of a Bitcoin. If I multiply that difference by the fair market price of $63,472, it equals about $2.48. That is the cost of the spread. On top of that though, I am also paying a transaction fee of $4.60. So in total, I am paying $7.08 in spread plus transaction fees, which is about 2.8% of my $250 investment. If you want to know more about Coinbase fees, you can find details in their help section. Now notice here that under Coinbase Advanced, it states that there is no spread fee. Let me go back and try the same $250 transaction using Coinbase Advanced now. Here, the total fee shown is about $2.96. This is an estimate since I did not complete the trade. Coinbase Advanced fees are usually lower because trades are executed directly on the order book. Your fee depends on Coinbase fee tier system, which is based on your trading volume. Even if you only buy crypto occasionally though, it can make sense to use Coinbase Advanced if you're comfortable with it, since the total cost may be significantly lower. Now, is this transaction taxable? On the 2025 Form 1040, at the very top under your filing status, there is a question that asks whether at any time during the year you received, sold, exchanged, or otherwise disposed of digital asset. Simply purchasing crypto on Coinbase does not trigger a yes to this question. You can confirm this by using the IRS Interactive Tax Assistant and checking the appropriate checkbox. A purchase of digital asset or holding one in a wallet or your account is not a taxable event. That means that for a purely buy transaction, we won't receive a new 1099-DA tax form for digital assets. Now let's sell some crypto. Select the sell option at the top. Next, choose which cryptocurrency you want to sell, if you have more than one in your Coinbase account. Then choose how you want to receive the proceeds from the sale. You can receive them as cash, a stablecoin, or use the proceeds to buy another cryptocurrency. If you choose to sell Bitcoin and convert it directly to Ethereum, this is a two-step transaction behind the scenes. Your Bitcoin is first sold, usually to dollars or stablecoin, and then the amount is used to buy Ethereum. Next, enter the amount you want to sell in US dollars. For example, selling $500 worth of Bitcoin would equal about 0.00552 of the crypto. Finally, review the order. Note that there is a transaction fee. In this example, converting one crypto to another shows a $5 fee. If I sell Bitcoin for cash instead, the same 500 sell shows a higher fee of $9.38. So check the fees Coinbase charges you for different transactions. If you select the convert option and choose two cryptocurrencies you want to swap, it will work similarly to selling one crypto and buying another. The difference is that conversion is a one-click swap. This option usually includes a higher spread than selling and buying manually. When you review the conversion, you will see an exchange rate such as 1 Bitcoin equal about 28.7 Ethereum. Now let's go back to the digital asset question on the 1040. The form asks whether at any time during the year you received, sold, exchanged, or otherwise disposed of a digital asset. A sell or conversion transaction falls under selling or exchanging a digital asset in subpart B. Because of that, you must check yes on the 1040 to show that a digital asset transaction occurred, and the IRS will expect to see it reported on your tax return. If we double-check using the IRS Interactive Tax Assistant and select the option for receiving, selling, disposing of, or transferring of digital asset, we get the same result. We need to mark yes to the digital asset question on the 1040. And how is crypto taxed? Crypto is taxed as property, not currency. That means it is treated similar to stocks or real estate for tax purposes. If you sell or exchange crypto, it is taxed like a stock sale. You pay tax on the capital gain. If you receive crypto as payment, stocking rewards, or mining income, it is taxed as ordinary income based on its value when you receive it. But we won't be covering that here. In simple terms, crypto is taxed like stocks when you sell it, and like wages when you earn it. Additionally, starting with tax year 2025, U.S. cryptocurrency marketplaces are required to send users a new tax form 1099-DA for certain digital asset transactions. Coinbase should send you that form for any transactions involving sell or conversion. I will explain how to read the 1099-DA and enter it into tax software later in the video. I just showed you one way to buy crypto, which is a one-time order. This type of order is executed right away at the current market price. However, there are two other ways to buy crypto on Coinbase: limit order and recurring buy. A limit order lets you set a target price. The purchase will only go through if the crypto reaches that price or a better one. For example, let's say I want to buy $250 worth of Bitcoin, but only if the price drops. Here, the current Bitcoin price was $90,479. I can enter a specific price such as $89,000, which is about 1.6% lower than the current price. You can also choose suggested drops of 2%, 5%, or 10%. When you select one of those, the system adjusts the price automatically what it should be. For example, a 10% drop would bring the price down to about $81,431. You can review historical price data to see when Bitcoin last dropped that much and decide whether your target price is realistic. When you review the order, you will see that the expiration is set to good until cancel. This means the order will stay active until the target price is reached or you cancel it. There is also a Coinbase fee for this transaction. In testing few amounts, the fee for a limit order was higher than for a one-time market order. It was about 2.88% compared to 1.84% for a one-time order. If you set the limit order to good until canceled, it will execute automatically when the price reaches your target, as long as you have enough cash. You will then receive a confirmation email with the transaction details. There is one more purchase option you should know about: a recurring buy. This is an automatic purchase that you set up to run daily, weekly, on the 1st and 15th of the month, or monthly. Let's set up a weekly purchase. I will schedule $250 worth of Bitcoin to be purchased automatically using the cash in my account. Notice the transaction fee here is $4.60, which is 1.84% of the order amount, the same percentage as for one-time orders. Why choose a recurring buy? This method works well for average cost investing, also called dollar cost averaging. Instead of investing a large amount all at once, you buy a different price over time. When prices are high, you buy less. When prices are low, you buy more. Over time, this helps reduce the impact of price swings and lowers the risk of investing everything at a peak. If you are buying and selling crypto over time, you may want to review all your activity under the transactions options on the left. Here you can see any rewards you received, all purchases and sales, along with the amounts and dates. If you click on an individual transaction, you can view more details, such as the price at which it was bought or sold, the quantity, and any fees paid. If you have many transactions, use the filter at the top to sort by activity type, status, assets, or date. Now let's look at some account settings. Click your avatar in the top right corner and select Manage Account. Under Profile, you will see your name, contact details, and personal information that Coinbase requires for verification. You will also see your crypto addresses. These are unique wallet addresses used to send and receive cryptocurrency. There is also an option here to close your account. Another important section under your profile is Statements. Here you can view and download your monthly statements. You can also generate a custom report that combines your transactions. I will download a CSV file for all of my crypto activity by selecting the date range and clicking Generate. The file will include all transactions, dates, amounts, and related details. To obtain tax documents for your crypto activity, you can access them through your account settings or by selecting See All on the left side under Home and scrolling down to the Taxes sections at the bottom. You will see a reference to a new 1099-DA tax form that the IRS created to report the sale or exchange of digital assets. For tax year 2025, Coinbase and other US-based crypto brokers are required to report only the proceeds from sales or exchanges. Cost basis information may be missing from your 1099-DA for 2025, although many exchanges may include that information if available. Starting in 2026, the 1099-DA is required to include cost basis information for covered transactions, meaning anything that took place after January 2025. If your 1099-DA does not include cost basis, you must provide it yourself. You can select the option to edit cost basis details for your transactions. Scroll down to add missing cost basis information for a specific tax lot. Then click Go to Add Transaction Details. You may see transactions here from external wallets or platforms where Coinbase does not have cost information. In those cases, Coinbase may default to a zero cost basis and use the date the crypto was received as the acquisition date. This is usually not accurate and could result in higher reported taxable gain. This is why it is important to gather your records and update the correct cost basis and purchase date. I have a note here showing that all my cost basis information is up to date. You can also change the tax year and filter by sell or exchange activity, since those are taxable events. You can use tax impact filters to review items such as crypto income from mining or gains and losses from sales and exchanges. We're not going to cover any income deriving activities here. One more very important step is reviewing and selecting your cost basis accounting method for past and future crypto transactions. Click the link to learn more about each method. Coinbase offers 3 cost basis methods. HIFO, highest in, first out. You sell the coins with the highest purchase price first. The LIFO, last in, first out. You sell the coins you bought most recently first. FIFO, first in, first out. You sell the coins you bought first. Let's walk through a simple example. Let's say I invested $1,000 at different times during the year, starting in January when the Bitcoin was $60,000 and ending in November when it was $110,000. In total, I invested $5,000. To find out how much Bitcoin I received each time, I divide the $1,000 purchased each time by the price at the time of purchase. Across these 5 transactions, I received about 0.0567 fraction of a Bitcoin. Let's say later in the year, the Bitcoin price drops to $100,000. If I decide to sell $1,000 worth of Bitcoin, that would equal 0.01 fraction of a Bitcoin. Now let's see how the gain or loss changes depending on the cost basis method I use. Under the FIFO method, I sell the Bitcoin I bought first, which was in January at $60,000. To calculate the gain, I subtract $60,000 from the current price of $100,000, which is a difference of $40,000. Then I multiply that by the fraction of the Bitcoin I'm selling, which is 0.01, which gives me $400 of capital gain. FIFO is simple, widely accepted, and easy to track. Under the HIFO method, I sell the Bitcoin I bought at the highest price first. In this example, that was in September at $126,000. I subtract $126,000 from the current price of $100,000, which gives a negative $26,000. Then I multiply it by the 0.01 fraction of a Bitcoin I'm selling, which results in a $260 of a loss. HIFO can reduce taxable gains or even create losses in the short term. The IRS allows this method only if you can clearly identify the specific units sold and keep detailed records. You must also use the method consistently. Finally, under the LIFO method, I sell the Bitcoin I bought most recently, which was in November at $110,000. I subtract the $110,000 from the current price of $100,000 and multiply that by 0.01 fraction of a Bitcoin, which results in a $100 loss. LIFO can lower taxes in some situations, but it is less commonly used and requires clear records showing exactly which units were sold. Since now you understand the different cost method, you can set or change your cost basis method by clicking the tax settings link or going to taxes and scrolling down to settings. Then choose or update your cost basis method. Now let's go back to my tax summary page. You can see that Coinbase issued me a new 1099 DA on January 19, 2026. I can download it here since I will need it to file my taxes. If I select View Document, I can see all my tax forms and supporting documents for previous years. For years before 2025, you will not see a 1099 DA because this is a new form. Before 2025, some crypto exchanges issued Form 1099-B or 1099-K to report crypto sales. For certain types of crypto income, such as staking or mining, you may receive Form 1099 miscellaneous if the amount was over $600. And in some cases, non-employee crypto payments could be reported on Form 1099 NEC instead. I will not be covering any of these forms and income in this video. Now let's download the 1099 DA. This form is a summary of your short-term and long-term capital transactions. Long-term transactions are those where you held the crypto for more than 1 year before selling or exchanging it. The 1099 DA shows totals for each category of transactions. It does not list every trade in detail. For the detailed information, you should download the Gains and Losses report, which provides the breakdown that supports the totals shown on the 1099 DA. The last thing you should know is how to get help in Coinbase. Select the 3x3 menu icon and scroll down to Help. If you need more support, select Support Cases to start a chat or request a call with a live representative. Let's go through the 2025 tax forms you may receive for selling or exchanging crypto and stocks, and how they appear on your tax return. Example: Luca had a job where he earned $30,000 and received a W-2 form. During the year, Lucas sold some stocks and received a 1099-B from Fidelity. He also sold some crypto in his Coinbase account and received a new 1099-DA form. Note, all forms and numbers shown here are examples for illustration purposes only. Now let's review the new IRS Form 1099-DA, Digital Asset Proceeds from Broker Transactions. This form reports crypto and other digital asset sales. A copy is sent to the IRS, your state tax agency, and to you. On the back of the form, you will find brief instructions explaining each section on the form. Let's walk through an example and explain what each box means. At the top left, you will see the crypto broker's information, including the name, address, and taxpayer identification number, which for most companies is their EIN, Employer Identification Number. Below is the recipient's information. In this example, we have Luca Draper with his address and social security number. If you have multiple accounts with the same broker, you may also see an account number listed. If the transaction involves a tokenized security, such as a crypto ETF, you may see a QSIP number. Most regular cryptocurrencies like Bitcoin do not have a QSIP. The information from Form 1099-DA flows into Form 8949, which reports sales and other dispositions of capital assets, including stocks and crypto. Form 8949 has separate sections for short-term and long-term transactions and for transactions were or were not reported to the IRS. The letter code on the 1099-DA here tells you which section of Form 8949 needs to be checked. In this example, Code H refers to a short-term transaction reported on Form 1099-DA where the cost basis was not reported to the IRS, even if it is provided on your form. You may receive more than one 1099-DA if you have different types of transaction. For example, if you have both short-term and long-term sales, they will be reported separately, meaning multiple 1099-DAs. Box 1A shows the Digital Asset Identification Code issued by the Digital Token Identification System. If you see a 999 number, it usually means the asset is not registered in the system. Box 1B shows the name of the digital asset being reported. In this example, BTC stands for Bitcoin. Box 1C shows the number of units sold, exchanged, or disposed of. In this case, it is 0.01197 fraction of a Bitcoin. Box 1D shows the acquisition date, which is the date the asset was originally purchased. This box may be blank if the asset was transferred from another platform, if the broker did not have that information, or if the asset is considered non-covered. It may also show varied if the units were acquired on different dates. In this example, the acquisition date was March 11, 2025. Box 1E shows the date the asset was sold or exchanged. In this example, Lucas sold his Bitcoin on September 23, 2025. Box 1F shows the proceeds from the transaction. This is the total amount you received from the sale. Box 3A will indicate whether the amount shown in Box 1F is gross or net proceeds. Most people will see gross proceeds unless the transaction involves more complex transactions like options premiums. In our example, Lucas' gross proceeds were $1,307.95. You are not taxed on the full proceeds amount. To determine your capital gain or loss, you must subtract your cost basis from the proceeds. Cost basis information is shown in box 1G. However, for tax year 2025, this box may be blank because brokers are not yet required to report cost basis. If your cost basis is missing or shown as 0, the IRS expects you to track it yourself. You should correct it with your broker if possible or properly report it on Form 8949. If a cost basis is listed but incorrect, contact your broker first to avoid IRS mismatch notices later. In this example, Lucas' cost basis is listed as $1,000. Box 1H shows accrued market discount. Box 1I shows disallowed wash-sell loss. Wash-sell loss generally will apply only to tokenized securities such as crypto ETFs that function like stocks or mutual funds. A wash-sell occurs when you sell a security at a loss and repurchase the same or substantially identical security within 30 days. Under current rules, regular cryptocurrency transactions are not subject to wash-sell rules yet. That means you could sell crypto at a loss today and buy it again tomorrow without triggering a wash-sell disallowance. Box 2 is checked if the broker reported your cost basis to the IRS. Starting in 2026, brokers are required to report cost basis for covered digital asset transactions. What are they? Covered transactions involve acquisitions of digital assets on or after January 1st, 2026, which means that non-covered transactions are those that occurred before that date. For those transactions, the broker is not required to report cost basis to the IRS. For tax 2025, all digital asset transactions are treated as non-covered. That means box 2 will likely not be checked. Instead, box 9 may be checked to show that the transaction is non-covered. Box 3B refers to qualified opportunity fund transactions, which is a more advanced topic we won't be covering here. Box 4 shows any federal income tax withheld. This box will usually be blank. However, if you did not provide a valid Form W-9 to your broker or your Social Security number was missing, the broker may have applied required backup withholding in those cases. Box 5 relates to certain disallowed losses due to ownership or capital structure changes, an advanced topic we won't be covering here. Box 6 indicates whether the transaction is short-term or long-term. This should match the reporting category on Form 8949 and the letter indicator at the top. For short-term transactions, you may also see ordinary checked, which means the gain may be taxed at your regular income tax rate. Box 7 is checked if you received only cash proceeds. If you received other crypto, property, or services instead of cash, this box will not be checked. Box 8 is checked if you transferred assets from another broker or wallet and provided the cost basis information yourself. It indicates that the broker had to rely on cost basis information provided by the customer. Boxes 11A through 11C relate to more advanced topics involving stablecoins and NFTs. If digital assets were transferred into your account and later sold, the number of units transferred and the transfer date would appear in boxes 12A and 12B. Boxes 14 through 16 contain state tax information, which will probably be left blank unless state tax was withheld. Because brokers may need to issue separate 1099 DA forms for different types of digital asset transactions, and because the IRS version of the form is not very user-friendly, many crypto exchanges provide a clearer summary version of the 1099 DA, similar to how stock transactions are reported. Let's look at this mock-up 1099 DA summary example from Coinbase. The same information is included, but it is organized in a more user-friendly format. At the top, you will see the recipient's name and account number. Under the Summary of Activities section, you will see the taxpayer and payer information, along with a summary of transactions. The report shows whether the cost basis was provided by the broker or by the user. It also separates short-term and long-term transactions. The total proceeds from Box 1F and the cost basis from Box 1G are listed here, along with the calculated gain or loss. The first page provides a summary table, and the following pages include detailed information for each transaction type. For example, under the short-term section, there is a note stating that the cost basis was not reported to the IRS, even if Coinbase, in this case, does provide it here. The broker 1099 DA form will also indicate which checkbox should be marked on Form 8949. In this example, it would be Box H. You will also see references to the original 1099 DA box numbers, such as Box 1E for date of sale, Box 1C for number of units sold, Box 1F for proceeds, Box 1D for acquisition date, and Box 1G for cost basis. The acquisition date may also display various for multiple purchases. The same type of information is shown for long-term transactions. If those transactions are non-covered and cost basis was not reported to the IRS, the report will indicate that the appropriate Form 8949 box, such as Box K, should be checked. Especially if you have many transactions, this summary layout is much easier to read and understand than the standard IRS 1099 DA form layout. Now let's go over how to enter your 1099 DA into tax software. If you are not sure where to enter it, try searching inside your software for 1099 DA, crypto, or digital assets. If you cannot find it, search for Form 8949 or Schedule D. That is where crypto sales and stock or mutual fund sales are reported. All detailed capital asset transactions are listed on Form 8949. The totals then flow to Schedule D. If your software does not list 1099 DA specifically, you will enter the information the same way you would enter stock sales. Here I see Schedule D and Form 8949 listed. I will select the section for stock, mutual funds, and cryptocurrency sales. It may also reference Form 1099B or broker statements. First, there is a simplified way of entering information for summary transactions where cost bases were reported to the IRS and there were no adjustments. You would simply enter these transactions as totals in your tax software. Otherwise, you need to enter detailed information. I will enter short-term and long-term stock sales from a 1099B. Entering crypto sale is almost the same. If you compare a Fidelity 1099B for stock sales and Coinbase 1099DA for crypto sales, the layout and information are very similar. Using a mock-up Fidelity statement, I will enter the stock name, date acquired, date sold, and sales price. Then I will select whether cost basis was reported to the IRS. After that, I will enter the cost basis and any adjustments such as disallowed wash sale. I will do the same for my long-term stock sales. If there were multiple purchase dates, you may need to enter various for the acquisition date. For 1099 DA crypto sales, just like stock sales, short-term and long-term transactions must be entered separately. First, I will enter the short-term crypto transaction. I will enter BTC for Bitcoin and add a short term for easy reference. Next, I will enter the acquisition date from box 1D. Then I will add the sales date from box 1E of the 1099 DA. The sales price comes from box 1F, which shows the proceeds. You also need to report whether the cost basis was reported to the IRS or not, based on your 1099 DA. Be careful to select the correct form type in your tax software. Make sure to choose 1099 DA for crypto sales and not 1099B, unless that is the form you received. One of the most important parts is entering the correct cost basis. This will affect how much of your capital gain is taxed. In this example, Luca's cost basis was $1,000, which is listed in box 1G of the 1099 DA. If the cost basis is shown as 0 because the broker did not have that information, it is your responsibility to enter the correct cost basis. If the form shows an incorrect amount, for example 500 instead of the correct 1000, you should contact the broker first to correct it before entering a different number on your tax return. If you report a number that does not match what the IRS received, you may receive a mismatch notice from the IRS later. For regular cryptocurrency transactions, wash sale rules generally do not apply unless you are dealing with tokenized securities. Now I will enter the second batch for long-term crypto sale. I will label it as long-term if there is space. In this example, I do not have a specific acquisition date because there were multiple purchases. So I will select the alternative option and choose long-term. Next, you will need to provide the sell date and proceeds from box 1F and indicate that the cost basis on 1099 DA was not reported to the IRS. After entering everything, your tax software may show a summary of all transactions. In this example, I see 4 total transactions entered, 2 from 1099B for stock sales and 2 from 1099 DA for crypto sales. For each transaction, I see the asset name, acquisition date, sell date, type of transaction, proceeds, and cost basis. At the top, you may also see the total capital gain or loss. Next, I will show you how these transactions appear on Form 8949 and Schedule D. Now let's look at how crypto sales appear on your 1040 tax return. The 1099 DA digital asset sales and the 1099B stock sales that we entered into the tax software will show up on Form 8949, Sales and Other Dispositions of Capital Assets. Form 8949 is divided into 2 main parts. Part 1 is for short-term transactions, which are assets held 1 year or less. Part 2 is for long-term transactions, which are assets held more than 1 year. The reason for these separations is tax rates. Short-term gains are taxed at ordinary income tax rates, which range from 10% to 37%. Long-term capital gains are taxed at lower rates, generally 0%, 15%, or 20%, with certain assets taxed at 28%. In addition, the income ranges for long-term capital gains brackets are much wider. Under each part of 8949, you must check a letter box that describes the type of transaction. For Part 1, short-term transactions, the boxes include A, B, C, G, H, and I. These represent short-term transactions reported on Form 1099-B, Form 1099-DA, or transactions not reported on either form but similar in nature. The categories also indicate whether cost bases were reported to the IRS or not. For example, Box H represents short-term transactions reported on Form 1099-DA where cost basis was not reported to the IRS. You can only check one box per page. If more than one box applies, you must complete a separate Form 8949 page for each category. And obviously, the tax software will generate these pages for you. Part 2 works the same way for long-term transactions. The boxes include D, E, F, J, K, and L. These represent long-term transactions reported on Forms 1099-B, Form 1099-DA, or similar transactions not reported on either form. Again, the transactions are divided based on whether cost bases were reported to the IRS or not. For example, Box K represents long-term transactions reported on Form 1099-DA where cost basis was not reported to the IRS. Just like in Part 1, you can only check one box per page. If multiple categories apply, the tax software will generate separate pages. Now, going back to the 4 transactions we entered into the tax software, they will generate 4 separate pages of Form 8949. 2 for short-term transactions and 2 for long-term transactions. The first page is Part 1 with Box A checked. This includes short-term stock sales from Form 1099-B, where cost basis was reported to the IRS from our fidelity statement. The second page is also Part 1 but with Box 8 checked. This includes short-term crypto sales from our Coinbase 1099-DA statement, where cost bases were not reported to the IRS. The third page is Part 2 with Box D checked. This includes long-term stock sales from Fidelity Form 1099-B, where cost bases were reported to the IRS. Finally, the fourth and final page is Part 2 with Box K checked. This includes long-term crypto sales from our Coinbase Form 1099-DA, where cost bases were not reported to the IRS. All 4 pages of Form 8949 flow into Schedule D, Capital Gains and Losses, which is part of Form 1040. Schedule D is 2 pages long and is divided into 3 parts. Part 1 reports short-term capital gains and losses for assets held 1 year or less. Part 2 reports long-term capital gains and losses for assets held more than 1 year. Under each part, certain lines summarize transactions reported on Form 1099-B and 1099-DA. Line 1A in Part 1 and line 8A in Part 2 summarize transactions where cost bases were reported to the IRS and there were no adjustments. You would simply enter these transactions as totals in your tax software. Line 1B List totals of short-term sales from Forms 1099-B or 1099-DA where cost basis was reported to the IRS. These correspond to Box A or Box G on Form 8949. Line 2 lists short-term sales where cost basis was not reported to the IRS. These correspond to Box B or Box H on Form 8949. Line 3 lists short-term transactions that were not reported on either 1099-B or 1099-DA, but are similar in nature. For each transaction, Schedule D shows proceeds in column D, cost basis in column E, and any adjustments such as wash sale disallowances. The gains or loss is shown in column H. In our example, the short-term stock sales resulted in $942 loss, and the short-term crypto sale resulted in $308 gain. These amounts are combined on line 7, resulting in a total short-term capital loss of $634. Part 2 works the same way for long-term transactions. In our example, line 8B shows long-term stock gains of $3,044 and line 9 shows long-term crypto gains of $1,749. These amounts are combined on line 15 for a total long-term capital gain of $4,793. On the second page in Part 3 of Schedule D, line 16 combines the net short-term amount from line 7 and the long-term amount from line 15. In our example, this results in a total net capital gain of $4,159. If line 16 shows a capital loss instead of a gain, there is a limit on how much you can deduct against ordinary income. For all filing statuses except merit filing separately, you can deduct up to $3,000 of capital losses per return against ordinary income. Any remaining loss is carried forward to future years and would be calculated in your tax software on the capital loss carryover worksheet. For example, if line 16 show a net loss of $4,841, you could deduct $3,000 on your 1040 against other income. The remaining $1,841 would carry forward to be used in future years. Now let's go back to our example. The total from Schedule D flows to Form 1040 on line 7, capital gain or loss. In our example for Luca, that amount is $4,159. It is then added to his wages of $30,000, giving him an adjusted gross income of $34,159. On page 2 of 1040, we subtract the standard deduction of $15,750 for a single filer, which would bring Luca's taxable income to $18,409. The tax software calculated tax on that amount of $1,475. Since Luca already had $2,000 withheld from his W-2 job, he would receive a refund of $525. If you found this video helpful, please like and subscribe. Thanks so much for watching.